Hey, good morning, everybody. Morning, Goose. Morning, Jason. How's everybody doing? Hear that train? Good grief. Like, going through the room. Anyway, hey, everybody. Good morning. The market. Oh my gosh, we're stuck in this sideways consolidation, tight little range on S&P 500. Not as evident on the main index as it is in the futures. Morning, Valerie. Morning, morning. Yeah, so if you're new, I've got lots of new people follow me recently. If you're brand new, make sure you're a subscriber. You can chat with us, get in the live chat. You do have to be a subscriber to get in the chat. We had some bots start spamming chat with less than savory content, so you do have to do that. While you're at it, you might as well hit the bell with the little doodads for all notifications so that you get notified every time I go live, which is every morning that the market's open. I try to be on here live. Plus, Tuesdays at 5 p.m. typically, we do 30 minutes of your requests. So jump in on that. And let's go ahead and get started, I guess. So, disclaimer, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. I may be full of crap from here on out. May never get something right again. Unlikely, but maybe the way it works. So this presentation here, intended to be informational, educational, and fun, is not a recommendation to buy or sell any financial instrument. If you desire personal financial advice, hire and consult a financial advisor that has a fiduciary duty to you. What does that mean? It means they got to take care of you and give you advice that actually is supposed to help you based on your financial situation. Now, let's talk about something fun here. Check this out. The debt limit. All right. So tax payments come in and give us a little more room. But the tax rolls are coming in 30% light year over year. That doesn't fit with the narrative of the BLS, Bureau of Labor Statistics, that we have more and more jobs than we've ever had before, unemployment's at record lows, and people are making more money than ever. Wait a minute. Inflation doesn't take away from income tax. You pay the income tax when you get paid. You don't pay the income tax after inflation. So if we're bringing in 30+% less money on the income tax, something's not fitting here. something skunk in the woodpile. I don't know what adage you want to say. Something's not fitting with this narrative here. So as it looks right now, the April tax receipts may come in 35% less year over year. So Americans are bringing home 35% less money. I mean, you could go through all the tax tables, whatever, blah, blah, blah. I don't know. The top end jobs seem to be lower. The middle class seem to be lower. The bottom end jobs don't pay as much tax because you don't make as much money annually. But I don't know, 35% less tax receipts coming into the government. That doesn't sound a whole lot like, doesn't fit the narrative of, the administration and their more jobs than we've ever had and, lowest employment and all that bull malarkey. So, I don't know. We could talk all day about it, but what we got here, though, is the debt limit. And I know the House is talking about adding 1.5 trillion or 1.5 trillion to it or whatever to give us a little extra room. 1.5 trillion is only right up here, so just extends it a couple months. I mean, I don't know. Now, what we're actually looking at, though, is if those tax receipts come in lower, this blue hits the red line faster. So we're looking at maybe a June breach of the debt limit. This cash balance running out at this peak right here in mid-June. If this doesn't dip as far as it is estimated to dip. So this whole thing may pull forward right now. Most of the estimates are for September, but if you actually do the numbers, it's looking like cash will be exhausted by July on the conservative estimates that and this came from Goldman Sachs. And if receipts come in light for April, May, June, we could be out of money by June. That's pulling forward, way forward. That means that they need to be hammering out a deal today, which is not going to happen, in order to get it all passed and everybody happy by and in place by June. So we're probably gonna default. What does that mean for the market? I don't know. We'll see what happens. Back in August 2011, I think it was, we had a huge drop in the market. This kind of fits with my summer potential pullback. If we rally right up to that 4,500 first and then just drop out, we could see a lower low, or we could get a pullback from 4,300 that could go down 300 or 400 points on the S&P 500. But then we turn bullish. So these are the things to watch. These are the things to keep coming back and checking where we're at. So every day I'll kind of give you my expectations. So this is one of those things that's kind of flying. Everybody's thinking this is going to happen now. Well, it may happen now, but it may happen in June. It may happen in July. And Congress seems to think it's going to happen in September, but we should be way over defaulting by September. All right. Cold, hard reality. All right. So, anyway. Morning, Andres, Patrick, David, Kimberly, my lovely wife. Love to see you. And so the S&P 500, just looking at the simple chart, like I've been talking about, we have two paths. We have the break right up to 4,300, possibly extend to 4,500, which would be bearish, ultimately. Bouncing down from 4,300, bullish. Or we could correct now, find support around 4,000, and then make the run up to 4,300. That would be bullish. So, drooling on myself for a second here. I don't know what's going on. Anyway, I got my strawberry pina colada monster all hyped up this morning. Anyway, this can's smaller. I don't know what the deal is. Don't want to give you as much of the good stuff, I guess. Anyway, yeah. So there's S&P on the simple chart, popping over to ES. Here's the small range we've been talking about. Yesterday, it looked like it was going to be a doji, but dropped out that last couple hours and then popped. It looked like it was going to break down, but then popped right back up off of that support, the bottom of Friday's candle from a week ago. We do not typically make the low for a week on a Friday. So keep this in mind. If we start pushing down, we make a lower low today, it's likely to continue into Monday, Tuesday. That's like 90% likely to continue into Monday or Tuesday. Just keep that in mind. If we end up closing out of this range down here today, likely to go on down Monday or Tuesday, possibly even into Wednesday. Just that's something that you can almost for sure bet on is going to happen. So stay tuned for the end of the day. If you want to talk to me about it in Discord, links in the description. Everybody knows how to get there, I'm sure. Pat, good morning. Glad to see everybody. Remember, if you're brand new to the stream, got to be a subscriber to chat with me. And, if you got questions, hit me in the chat. Anyway, so I did buy a couple calls out to like next Friday for ES to break out and run up to this 4,300 area. I'm slightly biased long because this thing looks pretty darn bullish to me overall. We could pull back and I could lose my money. I only bought 2 calls, got like $800 on the line. I plan to make about 125% on those right now if we just pop and break out higher. S5FI, just kind of sitting right in the middle, not breaking out, not breaking down. And looking at the SP actual candles, we're just sitting in the range we had from back here in February. The high where we consolidated before we dropped off. Kind of doing that again. We may, although, look, we consolidated on the backside after popping up here. We consolidated on the backside and broke down. Now we're consolidating on the front side. Does that mean we pop out? Maybe. One could argue this is a little baby like shoulder, head, shoulder, weird looking, doesn't really have a solid neckline to it. per se. I mean, kind of does. It's just right, flat, dead even across there. But, you know, I don't know. Maybe it breaks out, maybe it breaks down. We'll see here today. It may just go sideways again. That's kind of my bias right now, just consolidating. The longer we squeeze in this tight little range, the bigger the move's going to be. And I rolled back on ES a couple of years and did not find where we did this kind of tight little thing in this tight a range with that many dojis. It just hasn't happened in years. So this is the tightest range we've been in. Volatility, VIX, has plummeted. You know, that broke below 20. I mean, this is kind of crazy right here. We haven't been to these levels since all the way back here in 21 when the market was rocking higher. I mean, we were making all-time highs here. And then NASDAQ started to freak out, and we made some more highs on S&P 500. Then it all came apart, and we started getting, you know, volatility. How's this going to work? Well, we're due a pullback. We're due some volatility. But as we've seen in the past, we have to go back. We can just hang out down at the bottom of the volatility for a good long time. I mean, we used to be down at 9 even. So historically, if you go back all the years that this thing's kind of been happening, 20 is about the resting spot. It's like the long-term average resting spot on VIX. And if you're unfamiliar with VIX, this is considered the volatility index. This thing spikes when we get volatility in the market. Usually volatility equates to the market dropping. Everybody freaking out. It's based on the put-call ratio on front months of S&P 500, you know, ES. So, yeah, long-term average right around 20. So we're down below that now. We can go lower. This tends to find a bottom about 10. Yeah, so yeah, VIX calls, but I would be cautious and probably buy them out and cover that event. We know we have some event risk. I mean, we started out talking about it. We've got event risk, so you got to be out here probably into the fall, maybe. Now, some ways to play it. Let's see if I can get my mouse back on the right thing. SVXY. This is one of my favorites right here, right now, because it's not decaying. UVXY, VXX, all those popular ones, they all decay. SVXY, we don't have splits in here. Like, it's not decaying. This one rallies. Why does it rally? Why does it almost always go up? Because when you roll VIX contracts, and the front month is almost always more expensive than the current month. So when you roll, you have a cost. If you're shorting that front month, that means you're always making profit on the roll. So SVXY, almost always making profit, except for like these little freakouts right here where the market freaked out, and we did have a split. It got way too high back here, and we had to split. And so it has a regular split. It did have a reverse split in there too for some reason, but it hasn't done it for a long time. So this thing will pull back. This is an inverse. This means it goes up when things are calm and everything's hunky-dory, and it drops usually about a 15 to 20% drop when the market freaks out. So right now, looking at the levels, this can very easily extend right up here to 70 off of this last pullback. Even though we're kind of in a market calm area, it could pull back now. It could extend. My keyboard not working as good as I hoped it would. Just have to manually delete these. I was talking about this with another group. So we have SVXY sitting here, and if we were to look at what would be a 15% pullback, we have to grab one of these tools right here. So right around, could drop back to about 58 on a 15% pullback. Now, look at the history since the COVID freakout. 13's kind of been about the smallest pullback we've gotten. on a little baby freak out. So you have to look at about right around 60 would be the downside target. Potentially 15, and some of the biggest ones have been 22%. So that could take us all the way down to 53. So if you're trying to do like an inverse, what do they call it? Gone from my mind all of a sudden. Inverse synthetic. So if you want to be a short synthetic stock, you would buy a put, sell a call, buy a higher call. Could be potential to go down, could cover us, but keep in mind that we may chug up to 70 before we get that freak out. And if that were to be the case, then our 15% down would be in the neighborhood of 60, and the 22% down would still, basically adding a couple bucks to each of the targets. All right. Moving on. I did do this trade. I got into this long back in March, looking for that target. We got there faster than I predicted. Imagine that. So now, expecting a little bit of volatility into the end of April, potentially. We do have an OPEX today. And then May will usually make a lower low in VIX than we saw in April. So just keep it in mind. All right. Where's the roadmap sitting? Down here, right around 60. So we could come right back down to the roadmap again. It'll probably be edging on its way up to 61, 62 in the coming days, if we stay elevated. That's where the roadmap line is. All right. Alrighty. Now, moving on to what's actually moving. What's crapping in today? NASDAQ, NQ. I was talking about ES. That's S&P 500 futures. NASDAQ, NQ. That's the NASDAQ, NDX, or QQQ, if you're familiar with ETFs, just still doing a high consolidation. So above everything for months and months. We're in the range of August where we topped out. Russell right here, doing a low consolidation. And looking a little bit like a head and shoulders for pushing lower. So cautious there. If we start seeing Russell roll over, we could get Russell pushing on down. And if you're unfamiliar with Russell, that's small caps. That's like IWM for the ETF. So the small caps tend to lead the market in different directions. Right now, they outperform to the downside on the banking. They have lots of small banks in their numbers. It's like 1,800 actually, even though they say it's 2,000. Dollar index, the dollar's showing weakness. We could push lower. We could definitely push lower. That could make stocks pop, but stocks could all of a sudden decouple the correlation and push lower while the dollar pushes lower. I do expect the dollar to come visit the mid-90s. Now, stuff moving today. Amazon showing a little pop. Potential breakout above the roadmap line. This is looking positive. We do have earnings coming up next week, Thursday in the afternoon. Be careful. Don't go too long. I am bullish out to June, July, which is not that far off anymore. Looking for a pop up into this. I'm kind of expecting good numbers and a big pop, or bad numbers and good outlook and a big pop. We'll see. I may be completely wrong. We may go make a lower low. Apple also getting talked about, showing a little pullback. I was kind of speculating we may see Apple pull back to the roadmap line since it hadn't been there since back in February. But we could just do another one of these little echo type pullbacks and launch off. This one is probably headed up to 200, 199, 200 area. Wish looks like it's in the garbage and getting a minor little pop. I saw where Ollie's was buying out Bed Bath & Beyond stuff. Looks like the market just opened. UCAR has no history that I can pull. FCX getting a little drop, almost to the roadmap line. Watch for a bounce. PG trying to break higher, starting out red, it's right at these prior highs. If we can get, whoa, mouse jumping. If we get a breakout there, it's opening right on that resistance. If we can get a breakout, a push higher, That one has a ways to go. We can see a big move up to like 170 if we can get going here. Positive potential. That needs to come way on down here. Yeah, nice positive potential. Breakout there. 175. Looks pretty nice. MCRB. What is this? Biotech. Of course. Make the list all the time. Redfin. Stuck on the roadmap line. Not showing anything exciting. Big lots. Making the list. And it was funny. My dad was saying something about Ollie's buying out Bed Bath & Beyond's stuff. I was like, well, it's kind of like what Big Lots does, and then Big Lots showing up on the morning movers. I just thought that was funny. Weird coincidence that I don't normally talk about Big Lots, and then I did, and then it showed up on the morning movers. Looks like it's heading towards zero. Yikes, they may go out of business. Anyway, HCA, beautiful pop right there. Another hospital nursing management, but that one's on a run. Let's see. Let's run a little number on how high we can expect this one to go. Yeah, 310, next resistance, right up here. Probably on the path. It could extend up to 350. So I put this in here as a break. It's just so I knew that was the things being talked about on StockTwits. Oil looks like it's chugging right down to the target. If we do find support right down here around 72, that's super bullish. Doesn't have to get down there, but it may continue right down in that 72, bounce, and then we could see a super bullish move. DHI, nice pop, right up into the resistance. So we couldn't go higher yesterday. If we could go higher today, may get up to 113. CALX, just chopping, below the roadmap line, nasty. TSLQ, still not breaking higher. That would indicate that Tesla is not breaking lower, but my target is down here around 145 to 150. We don't have to see that this week. Could be into next week. If we bounce in that zone, super bullish. Goose, you hear me? I put that on there. What, in February? Right when we did this stuff, I put that circle down here. So watch for that zone right there. If we find support and come back up through, this one's going right up to this trend line. Up to 250 area. That'd be a huge trade. I will get long as could be on the TSLL probably. All right. XPO, man, that's a nice move. That thing looks like it's potentially going to run right up to that 49 area, and it did the Head and Shoulders breakdown, and now that one's rocking. That's one you might be able to catch that one up to 50, and it could keep on rocking up to 54. Very nice. Yeah, trucking, even though there's a trucking recession, that's funny. Be careful, the earnings coming up in 2 weeks. WY win, yeah, finding resistance, probably going to pull back to the roadmap line. LVS, right up to the target, probably going to come back to the roadmap line. TSLS, another bear Tesla, still not breaking out. GDXU, looks like it's going to come down to the roadmap line. If you want the roadmap line, links in the description, or you can go pop over YouTube video I did back in December. Maybe it was New Year's, maybe it's Christmas. I gave away the code right there on the video, so you can go watch that after we're done here if you want to get that code for free. So, anyway, TSM, just hanging out the roadmap line. Gotta break some highs here to get going higher. Nail, nice potential breakout. This one, really nice. Don't think I've looked at this one before. 58 on the upside. I mean, that's an entry right there. 58 target, potentially 64. Really nice. send me an alert for a breakout. I'll go look at that later. All right, and Lennar, home builder, imagine that, right up to the target. And I would watch out. It could extend to 118, but it may retrace to the roadmap line. You can see in this pullback, where did that little thing come from? Look right here. That pullback, take us right back to the roadmap line. It's an echo in the market. All right, my bias for the day. Let's go look at it now. The market's open. Looks like we may just turn sideways. I really have no bias except sideways. So I drew this box on here yesterday. Until we break out or break down, I expect sideways. All right. Now, like I said, if we do break out lower, you can expect continuation Monday, Tuesday. It doesn't have to go into Tuesday. It can just do Monday. If we break out higher, well, we're going to go up to 4,300 more than likely. So that's what we got. We'll continue the conversation in Discord. And thanks, everybody, for coming. We'll see you again